Yo guys, what's going on? And in today's video, I'll be going over 5 ways to make money in the stock market. These are long-term as well as short-term methods. I just thought I'd lay out all the methods for people that might be new to investing or some people that might not realize all the different ways there are. These are, just touching the tip of the iceberg. This is very basic video. There's not a whole lot of in-depth in this video, but it can really help you open your mind and kind of understand what the options are for making money in the stock market. So I decided to go over them, and I'm not going to waste too much time. I'll get right into them. Number one is going to be the most common one that you see on YouTube, which is going to be dividend investing. Essentially what this is buying into stocks that pay dividends that, they might grow over time. The stock might grow over time, but your money that you're making from this really is coming from the dividend of the stock itself. When the stock pays out a certain amount of money, it's going to get deposited into your brokerage account or reinvested back into the company. Over time, you can make quite a bit of money doing this, especially if you reinvest it, because if you were to buy, say 10 shares of something, and each year you got 3% in dividends, essentially you're going to get, for every $100 each year, you're going to get $3. So by the time that you're actually going to get more than $3, because the first time that your shares reinvest, you will then have a higher position. So say you have like $101 in the, position. You would then get a higher dividend because you have more shares since it bought back more. Essentially, this can compound over time and give some pretty incredible results, and this is a really popular method for investors. A lot of people like to set up different funds on, just reinvestment, to where they'll buy into a fund, and then when the fund pays dividends, they'll just reinvest it right back into the fund, which I think is a great idea. And yeah, dividends are really popular on YouTube, especially just because you can talk about how much money you make from them. You can buy something right now and never have to touch it again, and you'll just get paid out money for the rest of the time that you own it, which is pretty cool. And it gives you like a lot of freedom, especially if you just want to invest money, have it provide an income source that you don't really have to worry about, and do whatever you want to do, travel the world, buy whatever you want to buy. It can get deposited back into your account just as easily as you can reinvest it back into something else. The second method of making money in the stock market is going to be capital gains. So say you did buy a stock like I was just talking about, like a dividend stock. Say you bought it for $100 a share and the share price went up to $110 a share. Whenever you sell the stock, essentially if you think about it, you made $10 because it's $10 more than what you bought it at. So that's called a capital gain. It's basically just the difference of what you bought and what you sold it at. And a lot of people do this for when they're trading stocks. They'll buy it at a lower price and sell it at a higher price. They'll take their capital gain, and that's what they'll either take into their bank account or put into their investment account, buy more investments with it or spend it. It's a pretty simple way to make money, especially if you choose some long-term growth stocks. You can pretty much expect to get some capital gains, just because it's not unlikely for the stock market to go up. It historically has. So capital gains are really popular. Depending on how you want to work your tax benefits and stuff like that, will decide if you want to sell stocks and take capital gains, or if you want to make a portfolio that's oriented around dividends, or what have you. You could have just multiple different things that are serving different purposes within your portfolio. But capital gains is definitely an easy way in order to flip stuff or get a position to a higher amount, which is pretty cool. The next method is going to be something that's also talked about a lot on YouTube, which is day trading and swing trading. It's essentially taking companies that you're not relying on the dividends for these companies. You're really relying on the capital gains for when you're trading these companies. And essentially what these people do is they'll buy a company. Let's say they buy it for $10 on Monday, and the company rises to value to $11 or $12 by Thursday. That's called a swing trade whenever you do that over a span of a couple days. Day trade is whenever you would do that, but within the span of the same day. Depending on the stock, you're most likely not going to get insane profit margins doing that. Swing trading is kind of the way to go. You can hold on to something for like a month or something. Me personally, I like to hold on to things for between 1 to 6 months, depending on how long I have to hold it versus what the reward is, what's my return on it. But you can make pretty good money doing this. It just really takes a lot of education and learning. Me personally, I don't know a whole lot about day trading. I don't really have the skills to analyze charts or anything like that. So I just try to go with some bullish companies that I research up on. And when I think it's at a good price to sell, I'll sell out and put it into something else. And it's returned me pretty good this year. This year, I think my portfolio has returned like 55, 60%, which is not too shabby. It's my first year that's like with me really heavily investing, so I think that I'm doing good, but it's, you know, hearsay. Day trading, swing trading, a lot of this is really popular when it comes to like smaller accounts, just because you can kind of flip stuff and make money quicker. The fourth one is going to be options, and personally I don't recommend options. Main reason being, kind of like with day trading, I don't really know a whole lot about it. Essentially what it is reserving the right in order for you to buy a stock at a given price. So you would buy a contract, say the stock's at $10 today, and you think it's going to be, you know, at $20, say in 6 months. You would buy an option, a $10, you know, share price option, and in 6 months when the stock is at $20, you're able to buy the stock at $10, therefore taking that $10 profit, you know, on a larger scale. I believe contracts are 100 shares, and you can make a lot of money doing it. The only reason I don't is just simply because I don't know what I'm doing. I don't really want to risk anything. The way that I look at it is I might as well just day trade or swing trade before I option trade, just because why, you know, spend the money or be in the hole if you don't have it. There's a lot of people that are really good at options trading. I just haven't really got into it. If you are good at options trading, you know, I'm probably beating around the bush a little bit. I don't know a whole lot. Just let me know some input down in the comment section below. But options trading can be a great way to make a quick flip, but it can also be a great way to lose some money pretty fast. So, you know, kind of take it as you can. It's kind of, you know, like gambling in a sense. If you're into any of the YouTube videos or Reddit communities for investing, you might have seen r/Wall Street Bets. And essentially it's just like a community of people that, it really is gambling. I mean, there's some, you know, method to the madness, but it's just options trading and hoping that you come up big. The last one's going to be super low risk, and honestly it's what's recommended by Warren Buffett for the average person. It's going to be index fund investing. Index fund investing can be great. What index fund investing is, it's essentially a large fund that owns a bunch of different companies depending on what your index is. If you have an S&P 500 index, it's going to be a fund that tracks the top 500 companies on the stock market. That's what the S&P 500 is. Typically it can return, I believe, 7.5%, including like accounting for inflation, which is really solid. And to get these returns year over year steadily is pretty solid. Like, not gonna lie, it beats most people that actively manage funds. So this is highly recommended by some of the really big investors. It's the laziest way to invest, and if you have like a retirement account or something, it's probably just the easiest to go with because you don't really want to have to worry about it a whole lot. Personally, I do plan on putting a pretty fair amount of money into a S&P 500 index fund here pretty soon. I'm going to be starting a new brokerage account because all my money that's been invested has been in a Roth IRA for the past couple years. And upcoming on the channel, I would like to start a brokerage account at the beginning of 2021 and try to grow at a pretty fair amount. I think that would be cool. So I might end up buying into some index funds in the future on this channel, just depending. But these are really good ways to actually like not have to worry about what the market's doing and what certain companies are doing when it comes to, you know, hitting numbers or not, because it's a bunch of different companies. It's like 500 different companies, so that's pretty cool. I recommend this to a bunch of my relatives, like my mother, people like that are older, just because they don't want to have to really worry about it. And it's a pretty simple way to invest. With index funds, the great thing about them, especially if you're young, you can really take advantage of compound interest. So if dividends from this index fund start reinvesting early on, it really builds up a big position by the time you're like 65. You know, you'll see these charts that are on these pictures that are like the power of compound interest. And a lot of this can be achieved with doing it like with certain companies, but me personally, I think it's probably smarter to do it with like an S&P 500 index, just because you could have an amazing amount of compounding over like a 40-year span, but if that single company goes down at the end of the 40-year span, then you kind of just lost like a big chunk off of the curve, which might not be the best. So if I do put some money into the S&P 500 index that I'm planning on this year in the brokerage account, I will probably put it on drip so it reinvests. I am in like a total stock market index fund. In my Roth IRA, I believe it's like 30-35% of the portfolio. So that's pretty cool, but I really haven't done like heavy index fund investing. There are some people that do pretty heavy index fund investing, and that's all they stand by. That's like all their investments are in. They'll have like 90-95% in index funds, which is pretty smart because their money is diversified. But you know, it just depends on your investment strategies. I've kind of rambled on when it comes to talking about the index fund thing, so I'll kind of try to wrap it up here. Yeah, those are the 5 methods that I thought of that are the easiest to comprehend when it comes to making money in the stock market. If I missed any, just let me know down below in the comment section. And let me know what your favorite method of making money in the stock market is. There's a lot of debate between value and growth stocks. Some of the common points are like value stocks are the ones that kind of grow a little, they kind of stay steady in price, but they pay dividends. Growth stocks are stocks that grow over time, like a pretty substantial amount. And growth stocks is where a lot of the capital gains can be made, but it just depends on your investing strategy. Dividends are taxed at a higher rate than short-term capital gains. So a lot of people actually stick to growth stocks, but it just depends on your investing strategy. If you're reinvesting the income, if you're putting it back into your bank account. I mean, there's so many different ways that you can like look at it. So just let me know down below your investing strategy, because I'm super interested to hear why you prefer dividends over growth stocks, or why you prefer growth stocks over value stocks, stuff like that, like how you manage your dividend reinvestments and stuff like that. That being said, I hope you all enjoyed the video, and have a good day.